Okay, good. Yeah, so this is the third class, no, the fourth class I'll be hosting for um, the class on the market business model, proper understanding of the market business model. And it's been, I mean, we started with, we've been working on building a foundational understanding for the concept so far, and we're making progress. Okay? So this is the fourth video, and we started last week. Okay, so we will proceed from where we stopped, and we'll pick up from there. Okay. And for those of you who have been following up, definitely majority of the things that would be taught from here on would not be confusing to you. But for those of you who are just joining, probably this is the first video you're watching, I would advise you start from the beginning so that you can have a proper understanding of what the market business model is all about. Okay, so let's get down to business. Now, the first thing I want you to know is that, you see, in every trader's journey, I'm talking about when you start building yourself from scratch, that is from the beginner stage, you would have to face one or two things. Some of these things you would not understand them at the first instance, and it would require a certain experience for you to grasp the full understanding of what it really is. And some of these things you understand them outrightly, like immediately. But what matters is that you understand them, because beyond the fact that you know something is the ability, is also that you understand that thing. So it is beyond that you know, do you understand? I mean, everybody knows a candle. The difference between a trader who, I mean, a good trader and a kid on the street is what they know and what they understand. The kid on the street who might, the kid on the street might just know what MT5 is and knows what they do with it, and just put the money there and start blowing his account. Meanwhile, a proper trader with adequate knowledge knows that he shouldn't do that. So this is the difference between you who is learning the market business model and majority of the folk out there. You're not trading because of, you just know that, okay, when price comes to this level, it's gonna act this way, or when price play out in certain way, it's gonna play out in certain way. No, it's beyond you just knowing those things. Anybody can know those things, but do you understand it? Because it is in understanding that there is a perpetual action. Okay, when you understand something, the reason why you do that thing, you are doing it because of, it is intentional, it is perpetual. You're not doing it out of oblivion. Get what I'm saying now? It's not a mirage to you, everything is clear. So the difference between you who is learning the market business model and who would be trading the market business model and every other person out there, every other trader out there, is that they know but they don't understand. You know and you understand. You understand the reason why each candle would play out the way they play out. It's beyond it's beyond candle formation for you. It is the reason, the fundamentals behind the candle formation. And this is the reason why, as the market business model, we can literally understand if there would be a huge retracement or a shallow retracement, a continuation or a reversal, we can literally tell where exactly price would come and where it will reverse from. This is not a zone kind of thing. This is price level marking. Preciseness, precision at its peak. So the difference between the market business model trader and every other trader out there is that the MBM trader understands what he is doing. So if you would be buying this candle, you're not just buying it because of it has performed some patterns. No, it is beyond that. There is a contextual understanding that led to the creation of this candle, and that is what you're trading. So you are literally not trading candles or whatever. What you are trading, in fact, you're not trading any other thing. What you're trading is reasoning, context. And that's why the market business model trader, like I said, can trade on any type of charts. I'm telling you the truth now. Line charts, bar charts, bring it, whatever charts. The market business model trader can trade, because when we advance in our teachings, you begin to see that majority of your entries would usually be at volume level. And what happens at volume level is, price moves away from there, like fast. There's no time to waste. Most of the time when you enter a trade, you begin to see price consolidate around that level. But the market business model trader, that does not happen. You want to look for that point whereby once you enter the market, there is an impulsive delivery. So as we will be learning also in our teachings, begin to see that when you start trading the market business model, your understanding of some things things that you've learned before and what you would be learning would contradict. That's the reason why I say for you to master the market business model, you need to let go of what you have known before, because those things don't work. If they were working, you wouldn't be here. It's as simple as that. So last week, we spoke about the market, and I explained the market to you properly. In-depth explanation of what the market is. Okay, I told you that the market is market is not a physical location. It's not physical. It's an action. That's what makes the market. Transaction. As long as there's a transaction, then the market have been invoked. Because if you want, and then I went deeper to tell you that okay, the market will be focusing on is the currency, foreign exchange, and I explained the exchange market. I explained what makes it foreign exchange, etc., etc. So you might go back to watch the video if you have not watched it, because the video would be bedrock to. This video will be a follow-up from what I spoke about last week. Okay, so we're not starting from beginning. We'll just pick up from there. Now, just gonna have to now let's talk about today we'll be talking about understanding business. Last week we spoke about the market. Remember, we're talking about market business model here. Okay, so we've spoken about the market. In this video I'll be talking about business. That's our focus. The business of the market, that's our focus. Okay, but before I proceed to talk about the business of the market, I told you, I said the market is not a physical location, and what makes the market to exist is transaction. So I could literally be here and somebody would be somewhere else and would transact and will have performed foreign exchange. Okay, as long as, in fact, it might be beside me and we have two different items that are foreign to each other, that's foreign exchange. And then I told us that our focus is on the currency aspect. That is where we see, the currencies that we're trading. So our focus is not on the entirety of the forex market. It is on the currency market. The currency market, that's our focus. So the moment you begin to call yourself a forex trader, you are actually talking about the whole entirety of foreign exchange, which is a lot. It's much. But then you can zoom in down and say, okay, you're a currency trader. Now, as a currency trader, you need to understand what you're doing, the business you are into. Okay? As much as you understand the market, you need to understand the business you are into. How does it operate? How does it function? What makes it function? What effect does it have? You need to know everything, because when you know everything, you become aware of your actions. A very good example is a person who sells meat or beef. Let me call it beef. If somebody sells beef, yeah, and the person does not know what it takes, how to preserve the beef, the best way to bargain for quality beef, etc., etc., how to sell these beefs, the best pricing, how to store it, so many things, and also how to expand it, the person will definitely fail in the business. You definitely fail. So the problem was not the beef. The problem is that the person does not understand. Remember, I was telling you in the beginning of this video that understanding is our priority here. So the person does not he knows that he must preserve beef, but he doesn't understand how to do that. He might not even understand why. That's the reason why we're in this class right now. Because when you understand the business, currency business, it brings you into a reality of how to engage it, so that you stop trading. By the time we get to the trading aspect of this class, you don't trade haphazardly. You trade like a business person. And this is the reason why when we get to other section, we'll be speaking about why this market is a business. You have to take it as a business. This is not an investment scheme or a Ponzi, whatever, or a flipping stuff. No. When you're in this market, you are a business person. So you must understand the business aspect of this market. So let's get down to proper explanation. Now, you see, the entirety of the currency market, which is the forex market, the entirety of the forex market, okay, is broken down into 4 parts. I'm just gonna them like this. They're broken down into 4 important parts that every trader must know. The first one is the market. Okay? The second one is the business that happens in the market. Okay? You can see. The third one is the assets or instruments. Let me call it instruments because that's peculiar to what we do. Yeah. The instruments that the business use in order to function in the market. Okay? And then the last one is price. Now, this is the measurement, the valuing, the weighing, This is the determinant of everything about the instrument that the business use in the market. So these four things, they have their own functions in understanding of becoming a profitable trader. They have their own function, and if you mistaken this one for this one, you're gonna spend the rest of you're gonna be frustrated. Now, you see, in the market, we, like I said in our previous slide, I said we do not. You see, the market is infinite. If we try to understand the market, we just, it's humanly impossible. That's what I'm saying. It is humanly impossible for you to know everything about the market. It's humanly impossible. So instead of trying to chase impossibility, what we now do is, you see, inside this market here, the whole of the market, we now bring it, what's it called now? We focus on, instead of focusing on the market, we're now focusing on how the market functions. You get? So it's more like saying, instead of you to start, traveling the whole ocean, you can just take a cup of water. Take a glass cup of ocean water, study it, and then you can now know what kind of resources or stuff that the ocean water is made of. As large as the ocean is, just a cup of water properly tested, you can know what the entirety of the ocean is made up of. So instead of you to go from one place to another, from one place, which will take your entire life and you might not even achieve it till you die, but when you understand that you can just take a portion of the ocean, test it, study it, take it through scientific method, and you can make up of at least you can, to a certain extent, be 90% have knowledge of what makes up the market, of what makes up the ocean. That is what this market is all about. We can know this market. There are ETFs, there are index, there are stocks, there are what's it called now? Contracts, these contract options, there are bonds, there are a lot of things, there are yields, there is cryptocurrencies is on its own. There are a lot of things. There is market for the what's it called now? Clothing market, there is cotton market, there is oil, there is commodity, there is grain, there is steel, there is technology. All these places are market. There are markets. You can't know them all. But so since we can't know them all, our focus is, now, since we can't know the whole of the market, we can now zoom in, like just take one portion of the market, test it, check everything out, and know how the entirety of the market functions. And then that entirety of the functionality of the market now becomes our focus. So instead of going from S&P today, tomorrow you go to another NASDAQ, next tomorrow you go to index, upper tomorrow you go to indices, upper tomorrow you go to no. Instead of doing those things, understand how does all these things, how do they function? And the way they function is through business. Which means that without this business, this thing they call business, the market cannot function. So that is why the topic for this class is called business, and then in bracket, market action, because it is the hold on now, because it is the whatever goes on in this business, in the business side, whatever goes on here, it's what makes the market to function. Okay, so remove the business, market is not there. Okay, now the business aspect of the market focus mainly on transaction, and I'll be speaking about 3 types of transaction. Okay, I'll be speaking about 3 types of transaction in this market. Now, the first type of transaction I'm going to talk about is the bidding. Let me start from auction. The auctioning. Then the second type of, hold on, just follow up. I know what I'm doing. Okay, just trust that I know what I'm doing. Now we have bidding, and then asking. It's supposed to be asking before bidding though, because asking will definitely always be above bidding. But so let me bring it here. Put asking here, bidding here. I'm gonna explain everything. Don't be lost. Our focus is business. All these ones don't focus on the rest, just focus on what. Follow me as I'm teaching you. Now, like I said, the market can't function without the business that goes on in the market. So it is the business that gives the market action. Okay? Business, market action. It is the business that makes the market function. Without the business, this market will not exist. There will be nothing like volatility. There will be nothing. Now, business here. Now, this is where it becomes interesting. Business here does not mean buying and selling. No. The word business means the act. I'm talking about based on the market business model. Business means the engaging, everything that causes, everything that is of interest, everything that, for example, now in an NGO, non-government organization, they might not literally be after profit making. They might be after helping others. Okay, that is their business. The central bank of countries are definitely, they are not after profit making. Their interest is to make sure that the country's currency is strong enough and stabilized also. So that is their business. The government of a country tries to make the economy stable and make sure that everything is working out smoothly. That is the business. You see, these are not profits. They are not after the profits, but their own profit is in the result that comes out of their interest. They are engaging. It's more like saying, at the end of the day, you might be setting up a business and you might not just be after profit, but whatsoever reason that makes you set up that business or set up wherever that establishment, that thing is a business to you. It's your business. So in the market business model, we do not see business as just profit making only, or we don't see it as profit making only. We see it as transaction, because everybody transacts. Even the governments transact, the banks transact. Transaction is something that had been there since ages. Transacting started from, the old what was it called now? Trade by barter. Trading by barter. Trade by barter, for those who don't know, trade by barter is when you exchange goods for goods. Like somebody have yam. Back in those days, when someone have yam and another person has tomatoes, understand, they try to weigh how many tuber of yam can go for the basket of tomato, and they exchange. So let's say you have okra and you need let's say you need chili pepper. You have to go and look for someone who has chili pepper and pray, also hope that the person needs your okra. You get what I'm saying now? Because if the person does not need your okra, then it's none of that. They don't need it. So it's the same thing. So we don't care because the truth is, you see this forex market, like I said, you might, our own focus here is the currency. But like I explained to you, it's not only currencies that's been transacted in this market. Everything you see in front of your screen does not start and end with currencies only. It is a result. I was saying that the candlestick is an indicator that tells you what has happened. You don't know what happened. All you saw was a long bullish candle. What caused it? It could be war. War was not buying and selling. If there is war in a country or between countries, and then you see the price of a commodity, or let's say for example gold, it's war. They are not buying, they are not selling. But something caused that candle to move rather. There was an underlying effect, the reason for it. So that reasoning is what we are focusing on. Now, I know majority of you will talk about supply and demand. We'll get to that. Just leave that on one side. So as I was saying here, the market business model focus only on the business. What caused this thing to happen in the market? That is the business. It is the business that caused anything in this market happen because there was a business. There was there was an action, there was an interaction, there was something, there was a transaction somewhere. I'm telling you the truth. So when you see flood in a certain country, and you begin to see that the currency of the country starts selling, that's the business of the country. That's what happened to them. Okay, so I'm just explaining in the bigger scope. Our focus here is in currencies, but I'm just using that to explain the bigger scope of things. Now, for us to understand currencies and for us to understand this business of a thing, we must understand the reason why there would be a business in the first place. And the reason would be instruments, but I will not explain instruments today. I want us to understand business. But then before we go to instruments, now, I want us to see something, yeah? A country would need a country, because what we trade as traders is, now we are focusing on the currency market. So we are looking at the whole currency of the world. Every single currency is being owned by a country, okay? Now, every country has the way they run their thing. In Britain, their system of government is different from that of the United Kingdom. In Britain, they spend pound. In the United Kingdom, they spend euro. The business of the United States is different from the business of Nigeria. In the United States, they spend dollars. In Nigeria, naira is spent there. Now, these four countries that I just mentioned, as much as their system of government, the way they do their thing is different, similarly, their central banks will definitely have different policies, monetary policies. Because the truth is that they might be countries, but their economy are not the same. So each man to his own business, each country to its own business. And this is where it gets interesting. Remember, we are still in fundamental class. I've not started teaching the market business model. If you don't understand these things, you cannot understand MBM. That's the reason why I'm taking you guys through this journey. Oh, get down with the chart already. That's why you are still where you are today. Everything you think, everything starts and ends with chart. No. The moment you begin to think everything starts and ends with the candles you are seeing in front of the screen, you're set up for failure. It doesn't. There is more. I've been calling news release for the past almost 10 months, if not up to 12 months right now, which is up to a year. And I've not failed one. Like I've not failed once, like mistakenly failed one. You think it's all about just going to the chart and drawing lines? There are more. And this more is what I'm showing to you. So you pay attention and listen and be patient. And that's the reason why I don't put all those presentations in my classes, because I know I want people who are willing to learn to listen to me. I don't have time for that. I'm here to teach. Your job is to listen. So as I was saying, every country with its own business. We're still talking about business. What makes this market a function? Now, every country, let's use these 4 countries that I mentioned as example. Now, let's use these 4 countries that I mentioned. That is Britain. You remember that each of these countries have their own currencies. I will not be putting it now. I don't want to put it now, so that's not our focus. Our focus is not on currency. When we get to instrument, we talk about currency. Okay. Britain, then we have the United Kingdom, that's the UK, and we have Nigeria here, and then we have the USA, United States. Now, each of these countries have their own, that's Nigeria. Now, each of these countries have their own economy. The way they operate, the system of government in US is not the same as the one in Nigeria. So the way USA will handle their economy, their country, and wherever will be different from the way Nigerians will do that. The economic improvement, which is by far extension a lot of things, okay? What's it called now? A lot of things, yeah. Is different in the United States, different from that in the UK. The inflation rate in Britain is different from that in USA. The deflation in UK is different from the one in Nigeria. The interest rate in Britain is different, and it continues like that. Every country with their own business. And now, you see, based on the reality of these countries, is what will now determine what they will do. Example, everybody knows that the United States would, let's say for example now, the United States, there is so much inflation in the United States. And we're expecting them to start cutting the rates. I will definitely explain all this, but just follow up. Inflation means that the price of commodities are going high, and they need to do something so that the commodities can start falling. Abi? And that's simple explanation. But in Nigeria here, let's now imagine that in Nigeria, price of commodities were actually going down. So the government needs to do something so that we won't experience deflation. So you can see it's different realities. Different reality. So the way Nigeria would handle their economy is different from the way the United States will handle their economy. Very different. Nigeria is well known for exporting crude oil, yeah? If Nigeria decides to not export crude oil again, it's going to affect other countries that are relying on Nigeria for that crude oil. And what will happen is going to affect the market. Business costs, and whatever happens in the business equals to market action. That's what I'm telling you now. Maybe I should put it that way. Yeah, let me put it this way so that it will make sense. So if Nigeria decide to stop exporting crude oil, it's going to affect other countries that are, let's imagine Britain, UK, USA are relying on Nigeria. It's going to affect them. And by the time it affects them, it's going to be evidence here in the market. So the question is, by the time Nigeria refused to send the crude oil, what's going to happen? There's going to be turbulence in the market, because this economy will not be able to function. And by the time they announce each sector that needs the crude oil are not functioning well, it will eventually now affect the economy. And by the time it affects the economy, it's evident in their currency. And then the market starts showing it. So was it the market that caused whatever is happening? No. It was not the market. It was the way the countries were handling their business. Britain is well known for their natural gas and coal and all. If they decide to start pumping coal into the world, there will definitely now be less regard for coal and natural gas. It becomes deflated to such a level that it becomes very cheap. You can literally buy natural gas or get it for free. In fact, everywhere you go to, you see natural gas. It's going to affect the economy too. Whatever reason is making them to expose that much natural gas, it's their business. You can't force them. It's their countries, their territory. If the United States decide to, start a war or something, because they are very well known for their power, it's going to reflect on the market. It is the business of the countries. Remember, we are talking about currencies, and currency equals to countries' legal tender, which I've explained. So every country's business, policies, whatever they do, is what causes the market action. Okay? Is what causes the market action. So I hope that is clear now. That means that if there is flood in the United States and that flood destroy one or two things, it's going to affect the United States currency and it's going to be evidence in the market. It's going to be what? Evidence in the market. So it is not those candles you see or those volume or those stuff you see that makes price to move. It is the business behind them. Now, this is the explanation of business in the larger framework. Now, let's zoom into it. Now, let's zoom into it as a trader. Now, I have explained the fundamental understanding of market action. Okay? Now, let's go to the technical aspect of it. Now, this is where auctioning, asking, and bidding now comes into play. What is auctioning? What is asking? What's bidding? Now, I won't be talking much about auctioning because that's something that is kind of bigger and whatever. Our focus will be asking and bidding because we'll be using this throughout the entire. In fact, do you know that you cannot actually do anything in this market if you are not asking or bidding? You can't. If you're not asking or bidding, you can do nothing. You can do nothing. Now, for a business to function, there must be transaction, right? Good. Now, these transactions would be evidence in the market. Now, if, let's say, the United States, now, the asking Asking, when we use the word asking, it means that, or should I just carry this asking and bidding to price? Yeah, let me carry asking and bidding. I'm gonna teach asking and bidding when we get to price. I'm not gonna teach it here. Yeah, I'm not gonna teach it here. Yeah, auctioning too. Yeah, I'm not gonna teach it here, so you won't get confused. Okay, so we'll be talking about asking, auctioning, asking, and bidding when we get to price. Reason is because of I don't want you guys to get confused. I know what I'm doing. Okay, I know what I'm doing. So for proper understanding of this business which causes the market action, it means that there is no single candle that opens, makes a high, makes a low, makes a close, that is behind, that you cannot explain if you understand the business that made that thing to happen. A very good example. Imagine if you knew that, if you know, right, that the United States was going to start shipping bundle of gold out of the United States to, let's say, Japan, for example. This means that there will be outflow of gold from USA to Japan, yeah? So what are you doing? You're shorting the United States dollar. You get what I'm saying? What I'm saying? Or let's say you know that there's gonna be flood in a particular country. You can literally just short the country, the currency of the country. So was it the short that happened? Was it demand? Was it supply? No, it was not. Now this is where demand and supply now comes into the equation, because majority of you will say, "Oh, it's demand that moves the market. Oh, it's supply that causes it to sell. Oh, is this?" Listen and listen very well. If you in economics, yeah, demand and supply are consequences. They are not the one that gives effect. They are only the consequence of action. Okay, let me explain what I'm saying. There will only be demand for an item if there is need for it. Okay, so what causes demand is need. Need is an economic term. You see, the whole of this market functions based on finance and economics. So you can go and study more on it, but we are not here for economics or finance class. We are here to study current, understand why these things are moving. And you cannot understand them if you don't go through these steps. So please listen. There is a need for something. That is why there was demand for it. If there was no need for it, there will never be demand. If there is flood in a country that have never used boat, let's say last month the country there was no flood. If you were buying boats, let's say you were able to know that there will be flood in the future and you started buying boats, yeah? By the time the flood comes, the reason why people will start buying boats was not because of you bought boats last month. No, it's because of there is a need for it. A very good example, look at the pandemic, the corona pandemic. Majority of people never even used nose mask in their life. But that thing forced everyone to start using nose mask. So what causes the demand for nose mask? It was the pandemic. And that pandemic was a business of the country. You get what I'm saying now? Remember I told you business is interest, not anything that happens is the business. We are not for business. The word business is not limited to profit only. So when the whole country start using face masks, what happen? Face masks start going up. The price, the stock price for face mask start going up. Why? Because of the demand. And what causes that demand? Because of the pandemic. So the fundamental understanding was the pandemic, nothing else. It is not demand. The moment you start waiting for demand, price had gone. And this is the reason why your demand and support level fail. Why? Because where you are thinking is demand, well, you might be right. That's why majority of you, when you say, oh, price will come to a demand zone here, come in, price will come to a demand zone here. Well, you will see what will happen is that price will come and then break it, but eventually you'll be right. Because what you are trading is the consequence, not the reason for that consequence. Why did that thing happen? Why was there demand in the first place? Because there is a need. So what created that need? The business. What is the business? Flood, pandemic, government policy, monetary policy, interest rates, blah 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 blah, inflation, deflation, etc. etc. I hope you guys get what I'm saying now. Hope you get what I'm saying. So demand and supply don't move this market. It does not move the market. It is not supply and demand. Supply and demand is a consequence. So when next you see a bullish candle moving from a certain point, don't think it is supply that, or it is a demand or a supply that starts moving. It's something else, and that something else is what the market business. Now the interesting thing now is that, you see, you don't even need to now start studying all this long grammar. That's why I love the market business model. You see, the market business model helps you trade fundamental analysis technically. That was what I was able to do. When I was building the market business model, I asked this question. I said, how can I actually trade in such a way that there is fun? As I'm trading fundamental, I'm also trading technical, in such a way that both of them are in sync, and I don't have to now start looking for fundamental news before I trade technical. And by the time I don't have access to technical, I don't need to start running all around. I'll just use fundamental. And that by the time I don't have access to a particular chart, is there a way that I can just focus, just give me anything, as long as there is information, I can trade it. This is what the market business model stands for. So all this thing I'm explaining to you is what builds the foundation. They are the foundation. If you don't understand all these things, by the time I start using the terminologies on the market business model, you start getting confused, because I'll be referencing all these things. I'll be referencing all these things. So it's on you. How serious are you? What I've just done here is helping you build understanding for fundamentals. I've not gone into technical at all. Proper knowledge of how the markets operate. When you see, this is why the market business model trader, we are not scared of news. We trade news effectively. When you see Jerome Powell comes to the podium to speak, and then by the time he's speaking, you start seeing price dropping, and then all of a sudden there is impulsive move up. You get what I'm saying? Probably after the end of the speech or while he was speaking. The reason for this move, it was not because of those candles that formed. No, there were other things attached, because at that period they were on business. The interest, there are a lot of things. I don't think we should talk about them, because this is not a fundamental analysis class. Maybe once I'm done with the market business model class, when we're done with everything, maybe I'll start hosting classes teaching you inflation, deflation, interest rates, CPI, all these things, how they affect, how you can implement them, etc. But for now, let's just focus on what we are here to do. So in conclusion, even you as a trader, the fact that you're a retail trader, you are here. What is your business? Your business is to come here, trade, make money, and live good life. That's your business. Now, this your business will definitely reflect in the market. Yes, I know that your money is not enough to, I'm not saying your money is enough to, please don't get me wrong. I'm not saying your money is what moves the candle. I'm saying your money is recorded, is there, is part of, yeah, it might not show, it might be tiny, it might be $1 or whatever. Yeah, but you are part of the business people in this market. After all, a drop of water makes an ocean. Every single thing in this market matters. When a country is hosting election, when they are hosting election, for example, what will happen? They start making policies, and all these policies will have its effect on the economy. Okay? So the country business now is the election, and the election is having effect on the economy. If there is a way you can just know that if a particular candidate win in the election of a country, there is a way the market will react to it. That's what I'm saying. So the business of the country, depending on who now wins, is what will now decide market action. You get what I'm saying? Exactly. Market action. So without the business, the market cannot function. By the time we get to price, I will reference business again, because that is where we'll start talking about discounting, premium, pricing levels, a lot of things that we'll be talking about. Okay, but that's all for tonight on understanding the business. So we've spoken about market. Now we understand the market. We've spoken about business. Yeah. Now the model is what we'll be going into by the time we are done with instrument and price. That's be tomorrow and next tomorrow. So that the next time, that's next week class, we'll most probably be going deeper. I will then explain how all these things work together and show you examples of their functionality before we now move into what's it called now? Proper technical analysis. But for now, go through this video, watch it, and make sure that you learn one or two from it, okay? I'm not here to rush. I'm not in a hurry. I have all the time in the world to record this thing, these teachings, and put it here on the YouTube and, just let it be. Whoever wants to learn, they learn and they change their life. This thing works for me. And by the time we're done with these classes, I'll definitely be hosting live session where you guys will come and see where this thing is working live and direct. But you're not gonna become profitable if you keep on skipping. Some of you when you get to this level, this place where you're listening to me now, you skip. When I teach, my classes are usually very practical. So you might miss one or two things. And because of those things, you get confused the more. Okay? So sometimes it also requires that you rewatch the video the second time and note things that you skipped. But the first time, you most likely miss some points. So at the end of 6 months, I want to believe that everybody will definitely understand all these are still elementary. So if you're a beginning analyst, you're just starting, all these things will help you build a strong understanding for why some things happen in front of the chart. Do you know what I want it to be? I want it to be that by the time we start discussing all these candles and all these things, you are not asking me that, sir, why is this one like this? Why? No, you already understand them. All I'm just helping you to do now is help you bring all this explanation, put them into candles for you, put them into line graph, put them into different bar charts or whatever. You get what I'm saying now? So that'll be all for tonight, guys. I'll see you tomorrow. Good night. Enjoy the rest of the night.